The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and my pleasure to be here Monday through Friday, every market day, and the Dow's down 53 after Spectacular Friday. I say Spectacular Friday, I'm going to explain why in a moment. The S&P is down 477 at 1792. In fact, let me just go through these numbers one by one. It's the beginning of the week. Let's just get the parameters really clear. I've got the E-minis right here. I've already drawn in this arch formation. It's going to be really important. I said to my subscribers from my opening call, today is not the day. It is Tuesday's close that is going to be really important. And now let me go through the process. In the E-mini of the March future contract, it went right to a left side, right side price time match in the cup formation. It went to the 1788 level, but no, it didn't stop there. It went right to the 1794.50 high, which was about almost a point higher than the peak C minus failure that was made back at that level January the 30th at 2 o'clock. And now what we're looking at is that the 200-period moving average support in the 120-minute chart, which is at 1784, that is going to be something to keep an eye on for a couple of reasons. Because if it breaks, it breaks meaning that if there's a decisive close below it, let's say at the 1782 to 81 area at any particular 120-minute bar over the coming session, it says there are a couple of things that are going on. First of all, and now I can go to the spectacular move of Friday. And the reason why I say spectacular is that the takeoff bar from February the 5th, where there was an open. What was the open? The open was at 1744, and then it went down to 1732, round number low, and that was trough F. Made a very nice candle, a doji candle, long wick doji candle, and then you just took off straight away on Thursday. Had a spectacular move closing. The high was 1769.75, and lo and behold, it closed at 1766, just a little off the high. And then comes Friday, and instead of just going to the 9-period moving average, which at that point was at about 1773, it just continues soaring all day. Had an even amount in the afternoon. It was like a double in the afternoon. In fact, the Dow, or those of you watching intraday, the Dow was fascinating because it had a spectacular move going to triple digit, almost triple digit, and then what did it do? It came tumbling down. That tumbling down was, I can't remember now if it went negative or if it just almost went negative, and then went all the way back to triple digit. That to me was very positive action, and because of the positive action, it said to me that internally, now I can go through all the numbers, that internally, because the volatility index, VIX, and I make a big deal out of the volatility index, was plunging below the 9-period exponential moving average, having gone from 2148, and in the weekly chart, just look at this, the weekly chart having gone intra-week from the very high level in that 15 to 17 week U-shaped pattern, finally decided Friday that it was just embarrassed. It could not close up in that 18.41 or higher area above the 200-period moving average in the weekly chart. Instead, what it did is it closed right down at the 9-period exponential moving average in the low 15s. Now, that to me says we have to watch this market intently. There are a couple of reasons. Why? Because if the volatility index, which had an opportunity, if the market closed on Friday, we would have had a very ugly looking U-shaped pattern in the volatility index weekly chart, but that would have led to something very interesting, because then Friday would have been a sharp down move. Today would have been a little bit further to the downside in the market, but holding kind of steady in the VIX. And that would have given us a whole week to see whether or not the volatility index is actually going to close back at that level. In this case, no, a chart is a chart. Whatever the day is, the day is. And look what's happened. You've got the volatility index making that second U-shaped pattern. And it closed last week in a weekly chart as a weekly chart. So it closed very poorly. And it says now what we must be aware of, there are a couple of areas that distinctly say, watch these areas, because if there is strength, residual strength remains in these particular areas, there will be just enough upside velocity to push the market towards, in some cases, the all-time highs, in other cases, towards a really good rebound area. So now let's go through those areas. Move this away, and let's go. We'll start off with the Dow, INDU. The Dow is trading right now down 38. It's 15,755. It's made, this is very interesting to me, 15,798.51 was the high on Friday. If there is a lower low today, even by 0.01, in other words, instead of 0.51 of Friday, it's 0.50 today, that would say we've now finally got a peak A. I shouldn't say finally, it's only two days of a spectacular move to the upside. But that peak A says Tuesday, as I mentioned, will be very important, because if there's follow-through weakness, a Dow close below the 15,700 area, I'd say between 15,690 to 15,670, if there's a close in that area, there's a chance this is a single leg A up to single leg A, and it could be a failure mode. If there's a holding of the 15,715 area today and tomorrow, and then there's a bounce to a new recovery high above, let's call it 15,799, that would say it's leg B, and leg B then has a chance to go to the next important candle, which is at the 15,945 area. Those are the parameters. Now, as to the candle that was formed last week in the weekly chart, for those of you who understand my Chapman wave stalk leg formation, that pattern says that once the beak starts, that means that the entire pattern is completed, and that the beak is now the descending move to the downside, and it is establishing whether or not, after the beak has concluded, not just on its way down, but when it's concluded, there could be a very sharp move to the upside, and that upside move might not take it to a new high, but it's a pretty substantial move. And then the waveform has just done its job. It is complete. Actually, the peak is complete and it's finished its job. But there is this residual strength that it seems to come into whenever this peak is formed, and that takes you higher. But then you're on your own. Then there's a whole brand new bunch of technicals you have to look at. So now I'm going to be looking at this and saying 15,340 was the low of last week. If for any reason in the next 2 weeks, instead of closing on a weekly basis about 15,966, the 9-period exponential moving average, I just need to get rid of this line. It's upsetting me. Input. No, it's not that. Okay. Instead of closing lower, it starts to move high and closes. Let's call it, to be safe, let's call it 16,000. If there's a close above 16,000 in the next, certainly by this Friday, that would say, hey, be very careful. There could be a rally to or close to the all-time high of 6,588. I have to call it residual strength, because it's certainly not internal strength on the weekly chart. Weekly chart technicals are still very poor. So, okay, parameters to look for: a close below 15,690 anytime this week says be very careful. This could have been just an isolated bump, and that would have been short covering on Friday. That extra, the double, that added that whole afternoon session almost into the close. If, in fact, there is residual strength and the market closes just down a little bit today, both in the Dow and the S&P, that's saying be careful, because any move to the upside can start to accelerate. I hate to say we could move up or we could move down. It's one of the very few times that I'm looking at a market and I'm saying I could give you enough evidence to say that on the daily chart, if there's a new recovery high above Friday's high, yeah, we could start to move higher. I wouldn't say that. I'd say there has to be a close more than plus 25 on the Dow. It has to be more like a plus 35 to plus 40 and higher. And then I could say, okay, we should be going to leg B, maybe a C and a D is even included, because that was a typical takeoff pattern that we've seen in other serious lows in the Dow and the S&P. All right, let's go on to the S&P, and then I want to get a bunch of things done here so we can take calls, SPX.X. So here's the S&P. Now, the S&P, this is very interesting. The high on Friday was 798.03. The high today, 797.82. They're in sync so far, the Dow and the S&P. Both did not make new recovery highs as of now today. So the S&P weekly chart held the up channel. It's not an exact up channel, but it's pretty close to a good-looking up channel, parallel line. And very nice candle. And as I was saying, the weekly candle of the Dow is a very interesting one, because a very strong close above that candle is a big positive. A close within the wick would be negative, and the same thing for the S&P. A close into the wick of underneath 1782.68. That's 12 points below where we are now. On a weekly basis, we'd say, uh-oh, real problem, be careful. But a close above today's high, yesterday's high, Friday's high, says that we could start to tackle that very ugly candle on the 24th of January. In fact, there have been greater ugly candles to the downside than there have been in the S&P on the upside. And that's just something. Let's call it 1803, a close above, no, 1805, a close above 1805 this week. On a very short basis, a close above that says absolutely there's a good chance that we're going to go to a leg. And a close below, no, 1780, yep, 1787 to 1786 this week. On a daily basis, says, all right, be careful, we could start to pull back quite sharply. Gold is up 12 at 1275. Now, what's really interesting, even though the indices, the futures are doing okay.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I thought that I get a message to say that I was a little bit underwater there for a moment with the sound going in and out. Hope this is much better. We're all set, whatever the conditions are. For my subscribers, there have been a number of stocks, very low-priced stocks, that I've been looking at, wanting to jump into, and they either look great or they look terrible every other day. And it's very hard to know where to get in and what to do. For instance, here's a company, Graphic Packaging Holding Company. I really love the chart that it was making. It's making a cup formation, but it has these big pullbacks, even intraday. And now look what it's doing. It's at $9.99. It's at all-time highs. Well, I don't know if it's all-time highs, but certainly recent highs. Not all-time highs. All-time high was up at the 27 area back in October of 1997. But certainly in recent times, it's making highs. So there are a lot of stocks. I don't mean just a few. I mean a lot of stocks just under the radar that have done really well, that have these patterns that are a little bit wild intraday. They can have big moves on a percentage basis, and yet the trajectory seems to just continue to go up. Where do you get them and how you get them is a tough question. Do you start a little position here at $9.99, now it's 10, and say, leg B, I don't care, it should be going to C and a D. I mean, that was my attitude, but I just didn't have the courage to step up to the plate. And yet, every time I look at these stocks, They keep going higher. And there are a lot of them. They're under the radar. So I'm trying to say, hey, I don't care about the general market. On one hand, it's very important. I do care about certain stocks that are independently moving up or down. And that's what we're going to look at. I had a question in the end. For instance, here's one. Netflix can scare the daylights out of you at times, and yet the trajectory is just higher and higher. Leg E up in the monthly chart, having made a low of 52.81, right at the 200-period exponential moving average. Now I've got a weekly chart that says leg G. I don't know. ABC is more like a G/C. It's actually more like a C/G, meaning rather than having a final move in leg G, this is probably a leg C, and that there will be, over the next 2 weeks, a higher high. So I'm looking at that. I'm looking at the daily chart, which says, hey, you've gapped up and you've kept going high. You must be somewhat overbought. And yet, look at this. 429.26, down 72 cents, just off the all-time high from Friday. Friday's high was 430.50. So there are stocks that, if everything is technically still correct, and in this case it is in Netflix, there should be higher prices to come. How do you get on is the difficulty. Or what do you do? Or do you do it with an option? I had intended to play a Netflix with an option, a February option. I've missed that opportunity, but it would have been a wonderful option. There again, I just didn't have the courage to pull the trigger. Let's go to Warren in Denver. Hi, Warren. How are you?
Hi, Basil. How's it going this week?
Good, thank you.
So good.
So, yeah.
AUQ is the stock I need to look at. It's about to cross over $5, so once again it'll move into the marginable territory. Not that I have margin, but I own the stock a lot lower.
Okay, so let's just do this. We've got AUQ, which is Aurico Gold Inc., and I'm just going to put in a up arrow at that doji right there. So you chose this beautiful, it's a beautiful looking stock. And it has volume as well, 340, 355. Yep, there we go. So this is peak A, peak B, peak C, peak D. And the question is this E or a brand new A? And it doesn't really matter right now because it is acting very well. It is pushing away to the upside of the 200-period moving average. Folks, here's a technique you might want to just include in your own charting patterns. This is the 200-period exponential moving average. Look how it became a magnet, a resistance point, and then it became a support level, then a resistance, and now not only is it a support, but it's a springboard for a move to the upside, and you finally got the fast-moving average of the stochastic, the fast-moving average of the 9-period exponential moving average crossing the 200-period. That's usually a good sign. Trading now at 502. Since we're speaking, it's up 3 cents. And this is leg B in a new buy mode. I'm going to call it a buy mode because the MACD is very strong. The stochastic's at 88%. Above the 80% level I like. This is a target right now of 536. So hold on a second. I just want you to have a little bit. I want you to look and see if I can finish some work on the monthly chart, because the monthly chart has just been terrible. So this move now is the first decent move it's had in quite a while. I'll be back with Warren in Denver. We're looking at AUQ, Aurico Gold, and the Dow is down 28, S&P's down 2.25.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and we're we're back with Warren in Denver, looking at AUQ. Warren, yes. First of all, congratulations on picking this one up, because it really is. On the daily and the weekly chart, it is a very nice looking chart. The monthly chart, at this particular point, you've got the stochastic turning around, the on balance is turning around. The MACD hasn't yet crossed positive. If it gets to 5, I'd even say 515 to 520, there's a really good chance that that MACD can cross positive. That means the fast moving average, folks, if you're looking at my charts, it's this one here to the right. Let me just move that away there. That's the weekly chart. So I just want to show you this. This is the monthly chart. And what's very interesting about this is from the low bar that it made at 10 cents back in July of 2002, it ran to a peak in the Chapman wave all the way to 1875, March of 2006. Pulls back really sharply to about 919, June of 2006, and then soars all the way to a modest new high, just fractionally higher, to 1888, February of 2007, plunges down to $2, 208 in November of 2008, goes to peak ABCD, again, another D at 14.17, that was in August of 2011, and now it's gone trough A, trough B, C, D, E, F, and a G. And normally we look at a G and we always say, hey, that's where it can bounce. That's exactly what it's done on the monthly chart. But we are, what is today, the 10th? We're not even halfway into the month. So what I'm looking at here is that if the $4, let me just go back to the weekly, if the 447 support on the 9-period exponential moving average can hold this week, which it should, but you never know, the MACD is strong, stochastic strong, there's a good chance that over the coming 2.5 weeks before the end of the month, that Eureka Gold could in fact test the 5. I'd even put it at, it was right here, at the 536 is the high of the 16th of August, the week of the 16th of August, and 550 is the high of the week of 7th of June. So I'm anticipating there's a chance to get close to those numbers this week, and if that's the case, that could take it all the way into Wednesday or Thursday, which says there's a good chance that if, at trading at $5 right now, if it can close any day in the next 2 days about 515, there's a good chance that on a weekly basis it's going to close very nicely. And all the time on it, what I'm looking at is there a chance that in February we're looking at the very first time that Eureka closes above the 9-period exponential moving average since October, November of last year, of 2012. And if that's the case, that's going to certainly help the stochastic, which is at 14% in the monthly. I would like to see it get to 18 to 20% by the last day of February. Wow, if that happens, then this stock is going to have a very nice, I would say that from here on in, it should have a good 2 to 4 weeks of rallying. That's the way it's looking. So I think you've got a great entry point. You've got a lovely looking stock. The $4.60, 468 to 460 is the very near-term support on the daily chart. Hey, congratulations! I have to say, nice entrance, nice looking gold stock.
Well, it actually digs dirt, and they're actually they got a new mine that started up, things like that. The reason it went way down is one of their mines got taken over by Carlos Slim.
Oh! So actually, they've been fighting against that. That's on the books. That's a complete loss, and they've had to make it up. Well, they're doing that from the chart pattern. It looks very good. Right,
they paid for the mine, but that doesn't, cover the cost of development and as an asset. You know what I'm saying? So now, thanks a lot, Basil, for straightening out that daily with me, that E/A, because I was really hoping it would move to a leg B as it crosses over. I was going to try and add to this position since it's a winning position.
Well, this position right now, what I would say to you, if you were thinking of adding to it, I'm going to suggest two ways of looking at it. One is you either have to have a little bit of patience and try to get a little bit lower than the day's low today of 481. But if it does that, it says it's in a consolidation pattern, and you might even be able to get a little lower. What I would say to you is if this is rather an A than an E, even nibbling here at $5 to $5.02 for another position, but this one has a stop, a much tighter stop. It would have a stop probably at the day's low, which is a big percentage, but it's an add-on position. And what I would say is if you do add on and it's able to climb to 511 to 512, I would make the stop 2 cents. I wouldn't take more than a 2-cent loss on it.
Okay. Thanks a lot, Basil, for helping me out. I really appreciate it.
My pleasure. Thanks for calling. I always appreciate you calling. Thank you very much. Let's go to Maddie in Safety Harbor, Florida. Hi, Maddie. How are you?
Hi, Basil. It's Nahid.
Oh, it's Nahid. I haven't heard from you. How are you?
Very good, thank you. It's great to hear your voice.
Yeah, it's great to hear from you. I hope you're well. I hope the family's doing well.
Everybody's doing well, thank you. Now, I'd like to look at the Twitter, if you would please.
Okay. So, are we moving away from the Baidu lady to the Twitter lady?
No, I'm going to start looking at Baidu too.
Okay. So what position do you have on Twitter right now?
Actually, none. I like to purchase some. I have been looking at the chart. I've been looking at it. I haven't purchased it, so I'm back with TFNN, and decided to call you today and find out what you think.
Okay, that's wonderful. So wonderful to hear from you. It's been a little while. Nahid is one of our favorite Tigers of all time. She's just a wonderful trader, and it's great to hear from her. Now, Nahid, what I'm going to suggest is I'm looking at the 120-minute chart, and it's given, these peak Ds in the Chapman wave. It gave a peak D in the 120-minute chart at 74.73 back on the 26th of December. Sharp pullback to the 200-period moving average. Made a pullback to that level at 11:30 on the 30th of December, ran up to a much smaller peak D, that is a much smaller move up in 4 steps, and that was at 70.43 on the 3rd, pulls back to a trough D, makes another D, and then it goes a little higher to an E, pops up on the 17th, to 64.69. You notice that it's making lower highs and lower lows. Suddenly what happens, it makes a slightly higher low at 56.10 at 1:30 on the 27th of January, and then it goes to peak A, B, C, D, E, and then it goes to an F. Then it pulls back from 67.25, where to a lower low. Now the 9-period moving average at 54.34 is very strong resistance. That's the 120-minute chart. We have to do that because on the monthly chart, we've only got a single leg A up with a very sharp pullback. The weekly chart, we've got a single peak A and a pullback. And the daily, we've got that peak D at 74.73. Here's my recommendation. You're looking to buy this on the long, you're looking to buy this, correct?
Right.
So here's my thinking. At this particular point, I suspect there are a lot of impatient buyers of Twitter that are wanting to buy it because it has been a terrific winner, and they've heard all these stories before about there's nothing much there, and then all of a sudden there was something there. Then the earnings came out, and it turns out they got a little bit of a problem in focusing. But I think Twitter has life, and the way I would look at it is, to buy it here at 53.14 means that you're a little bit vulnerable because 58.34, nice percentage gain, point gain, 3 points, but it's not really the move that one would want if you were looking at it more as an intermediate term buy. I would suspect, based on the daily chart and the weekly chart, but a retest, not necessarily of the low, that's the whole thing. If it doesn't get to 38.80, which was the low of the 25th, but instead it goes to the 9-period, the 200-period moving average of 48.43. Anywhere there, I would say a 1-point pullback to the 47 to 46.50 area. That to me would say now you've got much greater security. But I'm looking at that area as the entry point for a move in that could take Twitter all the way back to 65, maybe even 67 or even 70. Not to the old high, but close to the old high. So I'm going to suggest 2 things. One is, on a very short-term basis, if Twitter is able to get to 55.20 in the next 2 days, I would say I'd buy that for a quick pop of about 2 to 3 points, and then I'd have to be very careful. That's one way to look at it. The other is just to have patience and say, if Twitter takes out the low of 49.99 that was made on the 6th, that is last Thursday, I think it was, that says I've got a little time, because within a point or two of that, of taking it out, a point or two lower, I do a little nibbling. So my area to enter Twitter for a little bit longer of a buy mode opportunity, that is, I'd still only have a 1.5 point stop. I would not make the stop more than 1.5 points, because it's got to work, and it's got to work quickly. And that would be just a dip underneath 48, 43. Or if it takes out the high of Friday of 54.92, somewhere just above that, I would start a little position, and that would be a trading position.
Thank you so much, Basil. That helps a lot, and it was wonderful talking to you.
Yeah, and great to have you back. Thank you for calling. I do appreciate it. And best regards to the family. Thank you, Nahid.
Bye-bye.
Bye-bye. Let's go to Frank in Baton Rouge.
Hey, Basil.
Hi, Frank.
How are you doing, Basil? I was
very well, thank you.
I was wondering if you could help me with BIS. Picking up a little bit of it right now.
This is a very interesting. This is the 200% short. This is the ProShares Ultra Short NASDAQ Biotech. Now, I've had it, and we've been stopped out, and it's got an H pattern that's turning into an M pattern. And what I'm going to be doing now is that what I did with my subscribers, I explained that there was this trend line in the IBB that if it gets taken out and it gets to where it is now, 248.32, there's a really good chance that because fund managers who have been buying this for a year or more, 2 years or more, have been rewarded every time that they're going to treat this now in the same way. And if that's the case, it says to me there's a chance that, and what I did with my subscribers is I showed them the HGX chart. I don't know if I can get it now in time. I just wanted to show it. 2004, many of us were looking at this and thinking it must be making a top. What happened was it continued higher. This is the Philadelphia Housing Exchange Index, the housing index. And what happened was it just kept going higher until, there it is, until eventually it pulled back to the 9-period moving average after a peak D in July. That was in July of 2005. Went underneath. That looked like it was all over because the MACD was turning down stochastic, and then it spiked up one more time to a peak E, and that was it, because it went from the 293 area down to the, I think, 57. So timing, I did the same thing with the crude oil contract. It just kept climbing and climbing until eventually it made a top of significance, and then it came back. I'm suspecting that we're seeing nothing different now in the IBB, that this could in fact be what I call the coda formation, where it is running now on fumes because the stochastic and MACD and the daily chart are not that great. The weekly chart is still good, but has started to weaken. The monthly chart is almost parabolic. It isn't quite. If I had to spiral above 255, that would say that it's going into this final phase, and this final phase could take it a few weeks. I don't know if it's going to do that. I'm stepping aside now. I'm not prepared to. We've had a number of shorts in the IBB. Some have worked out, and we've gone long. So the average is that we are down just a little bit. We've had some nice gains and some losses. So I'm stepping aside now. It's absolutely on my focus. I think this is going to be a very bad ending to the IBB, but it is absolutely the sector du jour that fund managers want to go to because they've been rewarded every single time. Here's my recommendation. If you bought the BIS anytime this morning, I'm pretty sure over the next few weeks or months you'll be rewarded very nicely. I'm prepared to say let's not do anything with, I don't know if you've already got your BIS, but I'd make a very tight stop, and I'll explain why. There is residual strength in this market. If this is going to continue to be the favored sector, I don't want to be messing around on the wrong side. So I'm tell you what I'm going to do. I've got caller waiting, but I'd like you to, if you don't mind, hold on for 1 second. I'm going to give you parameters to watch. I'm also going to suggest that the BIS is only just a tad lower than when you bought it. You might not want to do it. My suggestion.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We are back, and I'm on with Frank in Baton Rouge, Louisiana. And Frank, so this is what I'm looking at. The pattern that's forming now in the IBB, because of the strength in just a few, it's getting fewer and fewer, but a few of the biotech stocks says this, in fact, could move higher, and there's even a chance that we actually do get that leg D that was missing all the time, about 254.11. So I'm inclined to do the opposite. I would be looking, I just get out of the BIS. You can have plenty of time to get into the BIS, and if it fails later today and it turns around, you'll still have time. So I'd rather you not risk a little bit more in the BIS, which is 200% short the IBB, the high shares of the NASDAQ Biotechnology ETF, because the way it's acting now, buyers, the fund managers are coming in. I can just feel it. I can see it. The volume seems to be increasing. So that's what I'm going to recommend. So I hope that helps you. So that's with Frank in Louisiana. So I hope Frank's listening. So Dave in Denver. Hi, Dave. How are you? Did I get Dave in Denver?
Hello.
Hi,
Dave in Denver.
Yes, Dave. You want to know about RBY. Do you have RBI Rubicon Minerals?
I do.
Okay.
And I've made a little bit of profit on it, and so, of course, I'm looking at what I should do from this point. And
hold on. That's what you got to do. This is a great-looking stock. I'm terribly upset. We had this, and then I got out of it, and I just couldn't get back in. It's just been such a beautiful winner for those who have gone in. It's held the 9-period movement. I would not be doing anything. In fact, it's in leg C, just above the 200-period moving average, and I would say that any decline towards the 132 to 127 area, you might want to add back that little bit that you took off. This is a really nice-looking stock. It's only leg C in the weekly chart in a V-shaped pattern. I've got a target of 155. That's the target on the left side. That'll be the resistance, and that'll really help the monthly chart. I love it, RBY.
I was looking at that 155, and we're just 7 points away from it on our high today. But I was looking at our wave count as D here.
Oh, on the what? The weekly or on the daily?
Daily.
No, what happened was it went to a peak E at, you might have missed. Oh, wait a minute. I missed. No, you're right. I missed that. I called it, and that should be a peak D. No, wait a minute. I've got a peak D on the 23rd of January. I believe that's correct. Yeah, that's 23rd of January. Oh, I know what I did. Initially, I called it a double. I called it the double top at 87 on the 26th and 27th of December, a phantom peak E. I have to move that over. So this is actually a leg. This could be a leg F in the daily. You know what I'm going to do? I don't know if you can see Tiger TV, but send me an email, and I'll send you the chart, and you can compare, okay, if you can't see it on Tiger TV.
Well, I'm watching it right now on Tiger.
All right, so now what I've got is 135, 135, that's a double top. So this could be E. Okay, there it is. Now we're in leg E.
Okay.
So leg E is still very good. I like that very much. But it says getting a little toppy, but the technicals are fabulous. I like this very much. I think sideways consolidation, if there is one between 132, 127, could even go to 120 to 122 over a period of a week and a half if it's going to do any digestion. I think you did great. You've got it. You took a little bit off for reward yourself. I'd put that back around about the 130, if it can get there, but between 132 and 127. If it doesn't, you might have to wait a little longer.
Are you looking at a target of possibly the 190 mark in the long run?
190, the August high. Yes, and I just, I only do this. You know what I'm going to do? I've asked my my engineer if it's okay. I'd like to do a little more work. If you could call me tomorrow, let's do a little bit of work on RBY and also Dave, waiting Grand Rapids. PAAS is looking.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.